Good evening, welcome back. Can you all hear me? Can you all hear me at the back? If the volume subsides and you can't hear, wave or shout or throw something and we will adjust the volume. Welcome to the you can't hear. A bit higher? A bit more? Okay. Can you turn up the volume a little bit, please? Person in the booth. Is that a bit better? Okay, let us remonstrate if you can't hear us. Welcome back. Welcome to the sixth and final lecture in our series. Those of you who've been here throughout will know that we started with what is philanthropy really? How does it relate to social entrepreneurship? How does it relate to your lives and your practice and your future careers? We moved on to discuss the effective altruism movement and tried to figure out whether by rational calculus you could choose to do better, more effectively. We learnt about crowding in from Julian Legrand. We heard a first-person account of what it means to be a philanthropist and to try to nudge the dial of progress by giving away one's own money. And we talked a little bit last week about the politics of doing good. Okay. And the last of our sessions is really about the money of doing good. It's about investing for social innovation. It's about deploying capital to resist or mitigate existential threat. And the risk of belaboring the obvious, there are three words that really summarize our panel and I hope our conversation this evening. The first is social. Everything that we will talk about is designed intentionally to make problems less and benefits more. Second thing that characterizes our conversation this afternoon is the word capital. This is about spending other people's money to make the world a better place. And the last word that characterizes our panel and I hope our conversation is the word big. Okay. Esmée Fairbairn, Caroline runs, has about £1 billion of assets, correct?
It does.
The Gates Foundation has about $45 billion of capital. Is that right, Nick?
That's right.
So in anybody's book, 46.5, let's call it, $1 billion of capital is big. Okay? And in anybody's book, what these two people help do with it is social. And you'll see that all I'm really doing is giving myself an easy introduction to two people who worked for big society capital. So my very easy job is to introduce our very distinguished panel, Caroline Mason, who runs Esmée Fairbairn, and Nick O'Donoghue, who is a senior advisor to the Bill and Melinda Gates Foundation. I'm going to ask each of them in turn to give you a little bit of information about what they do, what they think, what they care about. After that, I'm going to ask them a bunch of questions, partly on my behalf, partly on your behalf, and then I'm going to ask you to ask them a bunch of questions. Okay, so as you're listening, start honing the perfect question. Okay? At the end, I will try to wrap up, and then we will all go and have drinks and continue the conversation in person. Okay? So, welcome, and welcome, Caroline.
Thank you. Thank you all very much, and it's an absolute pleasure to be here. I thought that I would go beyond capital, actually, because of course capital is very useful. And when people think of investing in innovation, everybody thinks about shiny, new, exciting, full of young, clever people just like you, actually, with very, very, very experienced financiers offering an IRR of 25% return and the promise of the next Amazon and Fitbit or Uber or Airbnb in the social or environmental space. But actually, I'm going to challenge that and say that investing for innovation in this space needs a multitude of players. And actually, if you really want to fundamentally provide sustainable change over the long term, you need a lot of tools to do that. And when you get it wrong, it can go catastrophically wrong within innovation. So I'm just going to give some examples of where it has worked well, where actually it's where innovation can sometimes mean better. It doesn't have to mean new, it can mean better. It can mean having luck. It can mean having a purpose. And I'm going to describe some of the things which have lasted decades and will be here long after Fitbit has disappeared in a cloud, in a tech bubble of overinflated valuations. I'm going to start with cat's eyes. Anybody cat's eyes? Anybody know the history of cat's eyes? So cat's eyes was actually invented by somebody who left school at 13. And the reason why he invented them was actually because, oh, do you know what cat's eyes are? Oh, okay. So they're the shiny things in the road. You know, when you're driving along, they're the things that reflect backwards. See, we don't even know what they are, but 99% of roads in this country have them, and they are ubiquitous around the world. So that was invented by somebody who left school at 13 and realized that actually, at the time, they wanted to, when he was walking on his way home, all the trams had finished. There were no trams anymore. And what drivers used to do was look at the tram lines, with the light reflected off the tram lines to find their way home, because there were no street lights or anything. And he ended up by saying, actually, we need to do something about this. There's something in the road that will help guide people safely. He tried for 15 years. And what finally made him successful, and the whole thing successful, was actually the Second World War, when there was a blackout, and suddenly the government thought, we need lights that don't appear up in the sky. Now, you know, that for me, we now have that as it benefits everybody all the time, and we just don't think about that as an innovation. An innovation that's gone spectacularly wrong is in flood management. I don't know if you know, but flood management became very, very technically exciting, and so there were lots of hard investment into hard barriers like concrete and dredging. And there are lots of organisations and companies that made a lot of money out of that. But actually now, what we're finding is that all those technical innovations were a disaster. And in Doncaster, there's a town called Potterick Car, where it's split down the middle. On one side there's a floodplain, and on the other side they have the old model. And when the last floods came, that side flooded, and the other side, which had trees grown, which had floodplains created, which had used natural barriers, didn't flood. And there's a huge amount of money now being invested in going back to the old ways. And finally, the final example I'm going to give you is where actually innovation takes more than money, and money's really important, is seatbelts. Does anybody know the history of seatbelts? Okay, so seatbelts, you know the triangle seatbelts? That was invented by someone called Niels Bohlin, who was an engineer that worked in Volvo. And actually, when Volvo invented that, they gave away the patent for free because they thought it was so important. Safety, you know, saving people's lives was so important. But that was in 1959. In 1983, it became law in the UK, and that took 15 years of campaigning, okay, and 11 attempts in law to make that. They tried 11 times to pass that bill. So at Esmée, when we think about investing in change, we think about all of the tools at our disposal. We will try and invest in renewable energy, of course, because we want to invest in the disruptive models of the future, so in renewable energy, in electrification. But what we'll also do is use campaigning to fund organisations like Client Earth. That was the organisation that took Boris Johnson to court to tackle him on the air quality in London. They're a not-for-profit environmental law firm that holds corporates and governments to account. Looking forward in the future, we are going to have to make investing for innovation more than just money. We are going to have to collectively use our resources to fundamentally change this, make these changes happen. And money is a great tool, but on its own, it can be massively disruptive. Airbnb, it's had a huge effect on fundamentally undermining affordable housing. Great for holidays, really bad for affordable housing. So I think we're in a brand new space here, and I think thinking about the implications of investment, thinking about the implications of innovation are going to be far more important than just focusing on, is this going to make me money in the short term? Thank you.
Thank you, Caroline. I'm going to go straight to Nick and then try to ask questions when we've heard from him.
Thank you, Stephan. Good evening, everybody. Excuse me. It's a great pleasure to be here. And since we're talking about innovation, I think it's fair to say that in my view, one of the great sort of innovations in academia, certainly here in this country over the last couple of years, has been the foundation of the Marshall Institute, which I congratulate Stephan and everybody involved in that, and it's a real pleasure to be here. I'll just say a word about my journey in terms of how I got here. I was a pretty boring banker for about 25 years after leaving college and business school. And one day, when I was working at JP Morgan, I got a call from the chief executive who was desperately looking for somebody who would hold up their hand and spend 5% or 10% of their time managing a new group that he'd started within the bank called Social Finance. This was in about 2007. And at the time, nobody really knew, including the chief executive, what exactly that meant, and certainly I didn't. But it seemed like something that was worth pursuing. And that was how I got involved in what has now become known as impact investment and social investment. And that led to me doing some research work at JP Morgan on that subject, brought me into contact with a guy called Sir Ronald Cohen. It led me to start with Sir Ronald, an organization called Big Society Capital, which was founded and established here by the UK government to promote the idea of social investment in the UK. And that led me ultimately, when I stepped down from BSc, to the Gates Foundation. And Stephan said to me as we were coming over, do spend a couple of minutes telling them what you do in the Gates Foundation, because for everybody in the audience, being a senior advisor to the Gates Foundation will sound like their dream job. So the truth is, it really wouldn't be your dream job for a whole host of reasons. But it is a fantastic, as Stephan said, it's got $45 billion in assets. It has done a huge amount of fantastic work all around the world in a whole host of issues, but particularly in health. And I'm there because I speak the language of finance, and increasingly in the world of development, philanthropists and donor governments are being required to speak more of a financial language. And the idea that the easiest way to solve problems and the only way to solve problems is to write checks is now one that's being questioned. And so we had some experience. I had some experience at BSc of thinking about how you can use philanthropic capital to address important social and development issues. So that's why I'm there. And I think, and reflecting on the subject tonight, investing for innovation, one of the, I suppose, the first thought that comes to my mind is that investing for innovation, those words illustrate the challenges of moving from financial, commercial world through into the social sector, into the development world, into the world of I suppose, politics and policy, because they mean totally different things to different people. Mm-hmm. And we have, and Caroline will attest to this, we have many times sat around the table talking to people, and we all think we're in violent agreement. Mm-hmm. And then at the end we realize we were talking about completely different things. Investing is a great example, great illustration of a word that in the financial world means something very specific. It means putting capital to work with the expectation that at some point in time you'll generate some cash flow and some profit and some return. Investing in the social world, quite legitimately, can mean something completely different. It can be meaning putting money into an individual community, into individual people, into individual projects where there's absolutely no prospect of a commercial or any form of financial return. And both are totally legitimate uses of the word investing. They just mean different things to different people. So my first lesson is be very careful when you're in this world that you really do understand exactly what the language that the other person is using. The other word is innovation. Now, an academic went and looked for definitions of the word innovation. There are apparently 40 different definitions of the word innovation. Being an academic, he, I think, thought the best solution to that was write a 41st, so which is even more incomprehensible than the 40 had gone before. But what that illustrates is that it's a very difficult notion to define, and it also means different things to different people. And for the purposes of this discussion, I want to talk about social innovation. So not just any sort of widgets that can be developed and have a commercial success, but more what are the big changes and products and services and ideas that have made a difference to people's lives. Some have gone on to become sustainable and investable, and some have not. And what is the link is there a thread that draws all these ideas together? So when you think about great social innovations over the last 30 or 40 years, what do I think about? I think about the development of microfinance, where Muhammad Yunus went out in Bangladesh and did something that no sensible banker would ever have done. Started lending money to poor people, principally women, in villages around Bangladesh, and out of that built a model that today supports and lends money to about 150 million people around the world. I think about fair trade. Fair trade was developed. The fair trade movement started in 1965. It was started by Oxfam, and has developed now to a business today that where about £2 billion of products are sold annually in the UK in fair trade. It's made an enormous difference in Africa, particularly to coffee producers and tea producers. I think about the Open University, which was started in 1971, where at a time long before the internet, where distance learning, the idea that you could learn without actually going to university, was a completely revolutionary idea. And over the last 40 or 50 years, that idea has led to millions of people getting degrees that wouldn't otherwise have got them. I think about things like the Big Issue, which we all see every day out in the street. It started in 1991 as a way to sort of give a hand up, not a hand out, and allow people who had no jobs and limited prospects of jobs the opportunity to actually do something and not only make a little bit of money, but also build self-esteem and ultimately enter the workforce. And there's a whole host of other ideas of sort of social innovation that you can think of, whether it's Teach First or Kiva or Patients Like Me or the internet, which started in the was started by CERN in the late 1980s. M-Pesa, which is many of you will have heard of in Kenya, which is which was the first time that really mobile payments, people were able to make payments over their mobile. And indeed, many of the things the Gates Foundation have done. So many of the vaccines and products that we've developed, or the foundation's developed to treat malaria and polio and TB, have all started with innovation and with somebody trying something and doing something new. Now, that's a very long list, but the point I wanted to make was, and this I think is consistent with something that Caroline said, is all of those innovations, or none of those innovations, started with investment. None of them started with people being given money and saying, here's some money, here's a loan, but I want it back, I want an interest rate, I want a return on it. It all started with enlightened philanthropists, governments, through grant programs, saying, look, seeing people that they believed in, seeing people who had good ideas, and giving them the money to innovate with, and to start businesses and enterprises with. And I think that, to me, is when we talk about it, investing for innovation, the most important lesson. Investing is a great way to scale up ideas. Capital is a great way to scale up ideas. And we've got, and indeed, in the examples I went through, many of them, microfinance, fair trade, those have been scaled through investment. They've become sustainable, and they've been able to have reached far greater scale as a result of investment. But at the beginning, the innovation piece, the great idea, the backing for the great idea, comes not from investment, but from philanthropy. And the problems that investment solves are the problems that come later in the cycle. They're problems of how do we bring good ideas to scale? How do we introduce sort of greater accountability and greater efficiency into how we manufacture and deliver services? How do we help organizations social organizations developing ideas, acquire assets to grow those ideas and scale up? So I think that's, as I said, that's having spent the last more or less decade of my life in this social investment, impact investment movement, I've seen it grow enormously. I've seen many do many great things around the world and here in the UK. But I think when we talk about innovation, which is the subject we're brought here to talk about, I think let's be very realistic. It is the great innovation. Bill Gates loves to say, progress comes from innovation. Innovation comes from research. Research comes from philanthropists and governments writing checks and making. It doesn't come from people who are particularly social innovations, from people who want to make money. So I'll stop there.
Thank you. So it seems to me that both of you have said, one way or another, that it's not really all about the money. Okay, you said, look, it's not just the cash, and you said, Nick, the cash comes second. But I don't know how many of you are trying to start something. I don't know, quick, hands up. Which of you would like to do something on your own account? Which of you has an idea, a startup, a venture, an innovation? Okay, so that's a non-trivial minority. How many of those people with their hands up think that one of the great impediments to what you're trying to get done is getting it funded? Those same people put their... Okay, so that looks to me like 100% of the people who think they're trying to do innovation think that the presenting problem is cash. Okay? And in my experience, that's very common. What do you say to people who say there are plenty of good ideas, there's just not enough cash? First, Nick, I think. And this is pre-scale, okay? So this is just...
I hear this, both sides of this argument all the time. I think the truth is that there is never enough cash to provide funding to the riskiest investments. So it's a question of there's a lot of cash, there's a lot of investment cash that's available for lower risk investments. So if you were, and we saw this at BSC all the time, people would walk in if what they wanted to use the money for was to buy a building to house homeless people, for example. It was much easier for them, not just from us, but from everybody else to raise money. If your idea is a complete startup, something new, something innovative, something that's never been done before, there's never enough individuals, institutions, investors willing to take really high levels of risk. That's why I think, too, back to my original point, I think it is, when you look at truly social innovations, that's why you have to rely on where typically the upside, even if you are successful, the upside won't be enormous. Why you do have to also rely on philanthropy. So when you think about getting money, if your idea truly has social value, then it's increasingly there's philanthropic money available.
Okay.
Yeah, well, we turn down 85% of the applications that come through our door. And it's not because they're bad. None of them are bad. But I would say, first and foremost, are you absolutely sure it's an innovation? Are you absolutely sure that there is not another organisation out there doing this and probably doing it maybe in a different city, in a different town? So that's what we look for. Like, genuinely, is it an innovation? We fund across the environment, the arts, social change, young people, sustainable food. We've been doing it for 60 years. We have a very broad overview and we kind of know what's going on. So we would really challenge on whether it absolutely is an innovation, or whether you could maybe offer your ideas and services to another organisation. Secondly, the legitimacy. What legitimacy does someone have when they walk through the door to solve the problem that they're trying to solve? And how are they actually using and involving the voice of the people or the issue that they are trying to solve? And if there's no legitimacy there, then we would say, I'm sorry, but that's not okay. So we do ask really tough questions, and we expect a genuine innovation, genuine expertise or knowledge, and also, importantly, legitimacy. I'm not sure if that's helpful or not.
Absolutely it is. Do you, particularly with your cat's eyes example, yes. Do you think that innovations, and for the purposes of this question, I'm going to leave the idea of innovation intact, but I'm going to come back in a minute and try and unpick it a bit. Do you think they always reveal themselves? So if cat's eyes didn't exist and somebody came to Esmée and said, please fund my experimental rollout of cat's eyes, it would be clear and apparent, having done due diligence and so on, and this person being a credible person, that this was a great innovation.
Yeah, we've funded some quite interesting, unusual things. I think we're known for the kind of sort of things that other people would go, oh my God, that's completely mad, and we will give it a hearing. So I think, there are lots of examples of things that we've actually started which wouldn't exist now. Well, Client Earth, actually, the not-for-profit law firm, being one of, like a case in point. Somebody came to us and said, do you want to do a not-for-profit law firm to take corporates, and we funded their first lawyer. So we do, and now they're 60 strong and changing the world. Yeah, we do. But as I said, it has to be something that's really going to shift the dial.
Okay. You both have said that language matters. Both of you have, as it were, focused on this notion of how we describe things matters to what we get done. And I wonder whether either of you wants to answer the question that innovation is, as it were, a fashionable but rather distracting term. And we might be better off thinking about things like adaptation. So I'm thinking now, Nick, of microfinance, fair trade, the Open University, Kiva, Teach First, and M-Pesa. None of those things is, in the Silicon Valley stereotype, innovative. They are all adaptations of existing platforms or processes. And that one of the things that we struggle with in the field of, as it were, social purpose is this wrong attribution of some Silicon Valley language.
Yeah, I think that's a very good point. I mean, I started out by saying innovation has 40
I'm just doing 42
40
now,
different 40 different definitions. It means different things to different people. It is. I mean, of course, you'll hear people make the point that no innovation has changed people's lives more than the mobile phone. And there's certainly a logic behind that. But realistically, I think when I talk about social innovations too, I'm talking about things that were really done with the intent of creating social impact. So I'm not talking about things that sort of in an unintended way created impact, like for example, the mobile phone. Yeah. And in the world of social innovation, as I said, the list of things that I gave that in my view, have had significant social impact on a significant number of people, they're pretty low tech, And so, this sort of equating innovation with something that has necessarily to be high tech, and it's not necessarily perhaps helpful.
Right, but microfinance is an adapt. I mean, the thing that characterizes microfinance is that the loans are unsecured. I mean, that's essentially it, isn't it? Or at least that was originally it.
Well,
so,
I think
so it's normal banking, but with unsecured loans.
Well, I would argue that what characterized microfinance was the type of people who were getting the loans, the fact and the cross-collateralization. That they were unsecured loans, but you had trust in the original microfinance version. You had groups of women cross-collateralizing each other. That was the sort of the breakthrough.
I agree, but the community, the to whom the lending was made, was also a function of it being unsecured. So in some senses, they resolve to the same thing. So that is, as it were, a kind of finessing, and required the institution of banking and money and so on in order to thrive.
Mm-hmm. Well, I'm just going to talk about language, because I think we had just used language in a way, and I think we have had 40 years of a certain style of language, which we're just adopting. And saying, so I have in the social environment, in the social space, I have a real objection to the world. We must scale everything. We must scale everything. Actually, we don't want more homeless people. We don't want more addicts. We don't have a built-in market. We've marketized everything. So we took this language of market, and actually, in our world, there is a built-in obsolescence. And that is totally countercultural to the current investment philosophy. We do not want more of this stuff. We want less of it. And so how you build a model that speaks a different language, that actually has a purpose. We don't talk, the reason why I think people get things wrong is that we talk about innovation, but innovation for its own sake is a complete waste of time. What for? What is the purpose? Like, why have the innovation? Which is why something like Facebook is absolutely doggedly sticking to its, saying we are a technology platform, not a content platform, because it doesn't really want to get into the messy world of having to think about the implications of what it does. And that until we change the mindset of the markets and finance to think about implications and consequences and impact, then we're doomed.
Can I take the other side of that a little bit? That I do think scale is important, actually, and I don't say that intending to say that there isn't a huge amount of wonderful smaller organizations doing fantastic work in the UK and all around the world. But I do think if you're going to have to, if you want to solve really big problems, you have to not only have a mechanism to generate new ideas, but you have to have a mechanism to bring those to many, many different people. And if you don't, if we didn't have mechanisms to do that, microfinance would still be about lending money to a small number of people in a small number of villages in Bangladesh. So I think there is that, and again, I don't want to in any way suggest that there isn't, that we don't need a balance of both. But I think sometimes the social sector is a little bit too willing to sort of dismiss scale. And actually, I think it's, as I said, I think it's important. If we want to solve big problems, we've got to do them in a big way.
Go on.
Well, I just think scale can be achieved in lots of different ways. And I think also scale often implies a cookie cutter approach that says this is being done to you. And, so I think, and it also tends to bring about a sort of market approach, which I think is not helpful.
So a skeptic, as it were, picking up Caroline's position, might argue that what we've done is we've taken something that was relatively straightforward, which was giving away money in order that people used it to make lives better. And we've created a kind of structure around it that is quasi-logical or quasi-market-like or quasi-scientific. Okay? So we call it investing, we don't call it donating. We don't measure well-being, we measure impact. Okay? We describe ourselves as doing venture philanthropy. We think about the model for getting stuff done being the model that derives from commercial entrepreneurship. In other words, what we're doing is we're trying to triangulate, as it were, social purpose and market mechanisms. Okay? Fair so far? Mm-hmm. If that's true, are there risks to that shift to the kind of marketization or the financialization of public benefit? And are there places where that simply can't go, where there are, that are, as it were, beyond the market rigor pale? Nick?
Yes. Yeah, let's be careful, though. Again, let's go back to be clear about our language. There are two different, we can impact investment and grants and donations are two different things. They have different, they may be similar purposes, but they are different things.
Indeed, but you'll concede that they've both been influenced by this movement that I've just travestied.
Yes, but I think if we look at on the donation side, I think having rigor and analysis and measurement around what you do with your money, even if you're a philanthropist, is important. And I think making sure that you get value or having some sense that you get value for money is important. And the value you get is the impact that you get. So it's a difficult thing to measure, but it's still important. And a lot of what you venture philanthropy is just another way of providing a discipline to the organizations that you're giving money to. I don't think that's it can be if like anything, if applied inappropriately, it can be damaging. But I don't think that it necessarily must be. Impact investment is a different thing. I mean, impact investment tries to combine two disciplines. It tries to combine a discipline of financial rigor and return, because the idea is that you will get some return in your money, and then it tries to combine that with some sense of how you're creating impact and thinking about who your beneficiaries are and doing that in a reasonably rigorous way. So I don't. If the central point is that some of these that we're bringing more rigor, more data, more analysis to whether it's philanthropy or impact investment, that's a dangerous thing. I don't really buy that.
Do you want to?
So we genuinely don't think about it in that way. I mean, I suppose we're slightly different as a funder because we almost 70% of our grant funding is core funding, a lot of it unrestricted. So we basically are like a social equity investor. We back organizations for 3 to 5 years. We will fund we will give them core funding for 3 to 5 years. So we're backing the organization. And if you're doing that, the rigor and the financial, because you want to know if you're going to put that money in back an organization that it's going to be there in 3 to 5 years' time. We don't do projects. So that means that effectively we have a real investment mentality in the way that we approach the allocation of our grant money, whether it's impact investing or grant money. Actually, there's very little difference. All we're looking at is basically the cash flows in a different way. Fundamentally, that's different, and the risk. But what we're finding is actually two things. One is the organizations on the ground are having to blend contracts, they're having to blend trading income, they're having to blend grant income, they're having to invent social, like investment income, bank income, and they're having to juggle all of these things. So the reality on the ground for most change-making organizations is that it's a financial kind of mosaic. And we have to understand that. So I think it is a lot more sophisticated than just this or this. The other thing is that grants can be used, we use grants as a sort of risk buffer mechanism as well. So we have the concept of a repayable grant, which is like a guarantee, and the money comes back and then gets reused. So I think using these tools in a really creative way, I think it will be really helpful in the future. And also the other thing is that which I have realised to my shame, and I didn't realise, is that on average, most of these organisations have about 20 different funders, all of whom are asking them for different metrics at different times with different expectations, all trying to attribute the impact to the investor, when the impact is not the investors. We are just enablers and facilitators. The impact is theirs, and we're all trying to grab a bit of it. And it's been incredibly humbling for me to kind of go, actually, we just need to let all of that go and not look for attribution and just back these organisations to just make good things happen. And it's hard to kind of let go of that a bit, but as a sector, I think we're not very good as funders, whether it's impact funders or philanthropic funders, we're not very good at being, I think oddly enough, the financial services system has a great ecosystem of clearing houses, syndication, all of those things to make the funding work really efficiently for the to get those money flows. I think in the social sector, we're terrible as funders or investors. We're terrible at it.
Am I allowed to say here, or does that compromise my neutrality? I've got one more question, so start to think about your perfectly honed question, and am I allowed to suggest that it comes in the form of a question? Before we go to the floor, I want to ask one last thing about risk. Okay, you mentioned risk just now. One of the things that I pick up talking to foundations, grant makers, organisations in this business of doing good with their capital is that a focus on better management, and particularly a focus on understanding risks and risk mitigation, is somehow inhibiting the kind of radical experimentation that sits behind some of what you've both been saying. Do you sense that? And if so, do you sense any way of nudging that back, either of you?
Categorically not the Gates Foundation, to be honest. Because I think if Bill Gates was here, he'd say, look, our job is to take risk. The more we take, that's what we're here for. And he is in the fortunate position where he has as much, in terms of spending, what they give away a year, $4.5 billion a year, would make him about the 6th or 7th largest donor, government donor in the world. So he has the ability to give away an enormous amount of money without the sort of constraints that go around government. So if DFID give money away and something goes wrong, it gets wasted, goes in, then it's on the front page of the Daily Mail. Bill Gates give money away, and which he regularly has, and gives it to the wrong people or backs innovation that doesn't work. As far as he's concerned, that's just fine. That's what he's here to do, and that's why the sort of the Gates Foundation exists. So I don't think that certainly I don't see that where I am now. Now whether in the broader foundation world that might be the case, I'm not so sure.
I think it is, and I think there's very little awareness of proper risk management. When I first arrived at Esmée, we had lots of these risk registers where it was green, it was red, and it was yellow, but nowhere was there articulated what the appetite for risk was. So you didn't know whether red was good or bad. The assumption being was green was always a good thing, and of course it's not. So we consider ourselves a high-risk funder, but now we have that really clearly at trustee level and board level. We absolutely have that articulated, and we've described what that means, and therefore that really allows the organisation to take risk all the way through. But I think that I think increasingly foundations have retrenched. There's Paul Street says, we used to be the icing on the cake, but when there's no cake, what's the point of icing? And we could do that sort of bit on the top, which was it could be risky, could be not risky, but there was but now I think foundations are having to really challenge themselves about what is their role in this new world and how much risk are they really genuinely prepared to take. We do appear in the Daily Mail every 8 months. Daily Mail doesn't like us. So we, every eight months to a year.
That's a badge of honour.
Is it, do you think? Yeah, well, actually, we do have a Daily Mail test that says, oh, we think the Daily Mail might really object to that. Oh, definitely worth doing then.
Okay. Any questions? Yes. Sorry, could you tell us who you are before you ask your question? And wait for the microphone, I beg your pardon, it's so that the recording can hear you.
Hi, my name is Silvia Lopez. I'm from PhD from LSE. My question is, we are talking about different language to mean different things, but we are also talking about different type of social change, isn't it? Even though we haven't delved into it. Nowadays, there is no one single donor that doesn't speak about system change. Mm-hmm. So my question to you is how that evolution in the notion of type of change that we want to invest nowadays, how has the notion of innovation evolved to tackle that systemic or system change? Thank you.
Who wants to take that?
Caroline.
So the way we tackle system change is what I call top and tailing, which is also about innovation, I suppose. And at the top end, we fund a lot of organisations that campaign to challenge the existing system. I mean, if you look at any of the old systems, whether it's finance, whether it's, education, health, they are all crumbling. Those 20th century models are all falling to bits, and even the governmental systems. I mean, look at Trump. I mean, and so we're sort of financing.
Sorry, it's exactly 7:20. I just wanted to, anyone who's got on the sweepstake, how long before his name comes up? It's 7:20.
Sorry.
Yeah.
So we fund campaigning organisations that are challenging the systems of the old, and at the bottom level we are incubating the models of the new. But for us, the models of the new, coming back to this point, have got to have legitimacy. They have got to be for and of the people who matter. And that is really fundamental to us. I don't think we can have system change anymore that does not have democratic legitimacy. That's so important to us.
I agree. Yes.
Hello, my name is Isabella, and I'm doing a master's in environmental policy and regulation. I have actually two questions, one for Caroline and one for Nick.
Perfect. Can you do them in reverse order to give Caroline a rest from answering the last one?
What? Say it again?
Could you do them in reverse order? Could you do Nick's first and then Caroline's?
Okay. For Nick, I wanted to know what's the difference between impact investment and social bonds. I think it's something that it's very trendy these days, but when it comes to people with no finance background, it's hard to tell the difference. And for Caroline, my question is, when you invest in these ideas that turn into startups or NGOs or whatever, I wonder if the foundation takes some equity. Yeah.
So,
and if have you ever regretted rejecting any innovative idea that after turned into a very successful, and you told yourself, hey, why didn't I invest in this?
That's three questions, by the way.
So let me answer the question, impact investment and social impact bonds first. And impact investment is another term that means a whole lot of different things to a whole lot of different people. And it has come to be it has come to mean a very broad range of things. So there's a very wide continuum on the impact investment spectrum today, and it ranges from what are very largely rather traditional forms of investment. So you might get an American fund manager I saw recently launching its impact investment fund, which invests principally in health and education. It invests with companies that articulate good corporate values. It tries to do some measurement around what they're doing. So broadly, they fit themselves into the impact investment bucket, but really they're not providing any new capital to anybody. They're just buying stocks and shares in existing publicly traded companies. On balance, I think that's a good thing. The idea that people will at least ask the question about values and ask the question about impact before they make an investment. Over time, if everybody does that, the world will be a better place. But I think realistically, those type of very mainstream impact investments are not going to are not what many people think of when they think of impact investment. The other extreme is rather complex, esoteric instruments designed specifically to allow individuals and institutions to effectively invest in outcomes. So where the return they get is a function of the social outcome they create. Now, those typically are called social impact bonds. They're called development impact bonds in the world of development. Today, there's about 60 or 70 issues in existence. Most of them, certainly half of them, are here in the UK. It's a growing market, but I'd have to say over the last 5 or 6 years, it's grown relatively slowly. To put it in context, within the impact investment world, there was a large conference in Amsterdam a month or two ago on impact investment, and social impact bonds was 10 minutes in a breakout session of a 2-day conference. Yep. So it really, but it's amazing who Bill Gates, if you say to Bill Gates impact investment, he says social impact bonds. And so it's funny how that instrument, and I think we know personally how that instrument has become lodged in people's minds as being the sort of as that's what impact investment is all about. It's not what it's about. What impact investment is all about is asking an additional question when you make an investment. So don't just ask yourself what's the risk and return, but ask yourself what's the effect that this money, this capital will have in people's lives. And there's a whole lot of different ways you can do that, but that broadly is what impact investment is about. And within that, there's a whole range of different areas of which social impact bonds is one.
I completely agree with that. We've made about 120 investments, of which 5 are SIBs. And all the SIBs have come to us for investment, and we're very, very, very picky about which ones we will invest in. But I'll talk about equity. Yes, I can give you 2 examples of equity. One is into an organisation called Auticon, which takes people with autism who are very, very good at software testing. And so they train them, and then they place them in places like actually major banks like Barclays is a client, and they're paid like £30,000-40,000 a year. But also they support Barclays in actually working out how they need to support the people within the workplace. So that's a company limited by shares. Another one is Gen Community that has created the largest community renewable project, which links British Gas, local authorities, social housing, and solar rooftops, and is now actually piloting the use of batteries within the home to reduce fuel poverty. So that's another equity stake that we've taken. We give 150k to them. It's a tiny amount of equity over 8 years, and it's amazing what they've managed, what they've done with that. So yes, we do.
Can I? Sorry, just this is slightly backwards, but I just want to check whether people in the room have a decent working definition of what the instrument social impact bond actually is. Because we talk about these things very fluently, but I just want to check.
Thing, is it?
I just want to check whether people know whether it is a common enough instrument for people automatically to understand what we mean when we talk about it. You don't have to embarrass yourself. Just nod. Somebody nod or shake their head if they don't know what it is. Does anybody not know what a social impact bond is? There are at least some people shaking their heads.
It's contract risk, isn't it?
Could you give us the simple definition of what the instrument is and does, or should do?
Yeah, a social impact bond. Social impact bonds were invented here in the UK about 6 or 7 years ago. The first one, famously, was done for, I say famously because it was actually famous. It was directed at short-term prisoners coming out of Peterborough jail. And something like 70% of prisoners in Peterborough jail who'd been there less than a year, once they came out, reoffended again within a year. And so the theory of the social impact bond was that that was happening because there was no interventions either in prison or when they came out of prison to help these people readjust and reassimilate into society. And if somebody was willing to spend that money to provide those interventions, that the reoffending rate would fall. And if the reoffending rate fell, that would be a good thing for government, they would save money. And so that was sort of broadly the package. And so the social impact bond was a structure that was designed to effectively, it brings government agrees to, or investors agree to commission an intervention from typically a charity or a non-profit. If that intervention is successful, then government agrees to pay the investors their money back plus a return. So it's a way so government win in a sense because they get to transfer the risk of, the program fails, they pay nothing. If the program succeeds, they save money and they give some of that back to the investors. The investors invest in the outcomes, so they get the benefit of having created social value, and these charities get somebody to pay for the intervention. So
brilliantly explained, and apologies if you all knew that already. Question, who had their hand up? Yeah. I'll come over in a minute.
Thank you. My name is Zach Clements. I'm in the MPA program here. So my question is about when good ideas cease to be good ideas. So we talked for quite a bit. I was surprised about microfinance. So microfinance has, rarely is there that much good evidence that something does not work. Mm-hmm. And so we talked about Kiva, we talked about Grameen, and there's, just a tremendous amount of impact evaluations that says this is a bad idea. So why is that still on the table, and when do you decide to stop investing in something that maybe used to be very good?
Well, I think when do you stop investing in something that's not very good? I think for us is when it stops having a social, when the impact is not what was intended. When actually, and then it's not that necessarily that, but when it's not doing what it's designed to do, if it's lost its way, I think is when you stop doing it.
I don't agree with your fundamental position. I mean, I know there is mixed evidence in microfinance, and I think what you are raising is a very important consideration in all this sort of world of impact investment is how do you prevent mission drift, something, and that's clearly what we saw in microfinance, particularly in India. It had the effect of tarnishing the whole movement, but there's no so. I certainly wouldn't sit here and tell you it's a perfect, every loan that's ever made around the world has been done in a perfectly prudent and correct way. But overall, the academic evidence, you're right, it's mixed. It's not actually all one way. It's actually pretty mixed. So life's not perfect. Microfinance certainly isn't perfect, but I would argue that there is financial inclusion, the ability for individuals in poor countries, particularly women, to get access to credit is hugely important. Now we have to do that the right way, and of course, as I said, when you have that size of an industry, not everybody will do it the right way. But on balance, I think it's been it's provided huge benefit to a huge number of people.
Hi, my name is Maria. I'm with Health Policy Planning and Financing. I had a follow-up question about equity. So how would each of your organizations define how you use equity with consideration to your grant process, especially to innovators who don't speak the language of impact or evaluation? How are you ensuring equity in your processes?
Do you mean equity as in ownership or equity as in justice?
equities and justice.
Equities and justice. Sorry, ask that question again.
Yeah, so I'm curious, in the
Sorry.
current process,
Sorry.
LSE needs to fill out a certain grant form and show that they meet metrics and
actually,
outcomes. How are you ensuring
great
that
question.
innovators who have
Great
interesting
question.
ideas and don't necessarily have the best writing skills or
Great question. Great question. And you know what? Brexit was an absolute slap in the face for most foundations, actually. And in fact, I said to my trustees, we are other. We are completely other. Why do we think that writing a beautifully crafted 2-page application is a good indicator of a great community activist somewhere like Redcar? It is not. And our processes are other. Our language is other. And so we're doing, and we kind of knew that, and we kept on talking about cold spots and saying, we can't fund in cold spots, it's really odd, we just can't, there doesn't seem to be anything there. That's because there's nothing there, that we recognise. And so we are fundamentally changing the way, we're now going out on road shows, having, to meet people, to go out, to actually look at things, to get referrals from other organisations on the ground. Because you're quite right, foundations in general are not. They are not. And there is, and again, that legitimacy has to come in, I think, absolutely. Because, it just does.
It is a huge issue for every foundation.
It is, it really
whatever
is.
their size,
Yeah.
is how do you ensure that the people who get the money aren't just the people who write good forms?
Yeah.
And it doesn't matter whether you're big or small.
Yeah.
But giving away money is, as Caroline said, is really difficult.
It's quite hard. Doing it well is really hard.
And on the one hand, you have to have some process and some system, but it's very, very easy. And the bigger the organization, the more likely this is to happen.
Yeah.
It's very easy for that to turn into some huge sort of bureaucratic process that effectively squeezes out the really sort of the smaller the work.
Actually, it's even charities. I'm sorry, can I just?
No, please.
I'm a trustee of a high-risk domestic violence charity, and we've created, well, not we, but they have a set of survivors have created this group called the Pioneers, which they've called. They don't want to be called survivors. They don't want to be called victims. They want to be called pioneers, and they're now integrated in pretty much everything. So, for example, when we recruited our chair. They were part of the interview panel. They've gone through all of our board papers, they've gone through all of our website, and they've just gone, why did you use that word? Like that word means nothing, and have really challenged us on our language. Like they said, underpin. What does underpin mean? How is underpin relevant to a woman who's survived domestic violence in Plymouth? It means nothing. So actually, we've had to really kind of rethink things, and that's a very good thing to do.
And this is what you meant earlier on when you talked about system-level legitimacy.
Yeah.
Yeah.
Hi, thank you. My name is Akash, and my question is for Nick. So last month I was involved in concluding a £8 million development impact bond. And that was possible because of the participation of high net worth individuals.
It was what? Sorry?
High net worth individuals. And since you're a banker, I'm asking this question to you. So I was just wondering, how do we make, or is it possible to make performance-linked charity a mainstream asset class, which could be a part of an individual or corporate's investment portfolio?
Thank you.
And so I missed the connection with the development impact bond.
So I said we raised development impact bonds of 8 million, and this was possible because of participation by high net worth individuals. Can we make performance-linked charities a mainstream asset class, which becomes a part of investment portfolio?
So it becomes a part of more institutional portfolios. I think that's a really. And we talked a little bit about sort of social impact bonds, development impact bonds before. There are 70, 80 in the world today. They're covering. So the good news is there's a whole range of different issues, both in here in the UK, the US, and in the development world. So they're doing they're addressing a whole lot of different issues, but they're fiendishly complicated, fiendishly expensive to construct. The metrics, the underlying metrics, are difficult. Are difficult. and they're too small. So the average size here is a few million pounds. And that's just, and they appeal to into individuals who have an interest in a particular issue, like recidivism or adoption or whatever. But it's very difficult to see them ever appealing to larger investors unless the issue size becomes a whole lot larger. And we haven't got to that point yet, you know. So.
Thank you. Yeah.
Thank you. I'm Valentina Yami, a PhD candidate. My question is probably more directed to Nick. It's about the amount of money that foundations like Bill Gates have, and we have been seeing that in global health, the Bill and Melinda Gates Foundation have been driving and setting the agenda because they have more money than big investor or what like the WHO. So and we have been seeing that they have been skewing the behavior of other foundations or other agencies and the recipients. So what do you think, how would you assure that you are aligning your priorities to the recipient priorities and to the other donors' priorities? It's both a question around governance and legitimacy.
Yeah.
Thank you.
I think that's a perfectly reasonable, demanding question, and it's something the foundation spends a lot of time thinking about. The principals of the foundation, the founders of Bill and Melinda Gates, have a core set of issues that they want to address. I think to some extent they get it's difficult to argue with most of the objectives that Bill and Melinda Gates have. It's difficult to argue that eradicating malaria, where we still have 5 million children a year under the age of 5 dying, it's difficult to argue that eradicating that disease is not a good thing. They have 10 years, 15 years ago, it used to be 10 million. So it's dramatically reduced. It's difficult to argue that getting rid of polio. And now I get an email every week telling me how many people around the world how many new cases of polio there's been every year. And last year there was a few dozen. So this is a disease that used to be an enormous problem in an enormous number of countries, and now eradicated in all but two countries. So I think it is. I think much of to a large extent, I think their legitimacy comes from doing things that actually it's difficult for any reasonable person to argue with. There is a broader question around their focus on global health, their willingness, their ambition to partner with a lot of other donor governments, which, and I think in a sense, one of the reasons that's done is to give legitimacy, to work side by side with other donor governments. There's a legitimate question as to what extent that's a sort of a zero-sum game. So these governments spend more on global health and less on some other aspect of development. Again, I've been there a year. I'm an advisor to the foundation. I can only tell you what I see from just observing it. They have very strong governance processes. They ask very tough questions. They're very conscious of this, of not wanting to distort what the way other people's money is spent. But I'm just glad that it's the case. There are other American foundations who are spending money in a whole host of ways that are much more objectionable. So we should worry about that issue. I think the Gateses are in this. It is difficult for me to look at what they aspire to do and say that it's a bad thing. But.
And it's interesting as well. That thread is rather interesting as well, because it links back to a session that we had in, I think, the second or the third of these lectures, where we talked about crowding in and crowding out. Those of you who were here will remember that this conversation you've just been having relates to that session too. Okay, next question. Yeah.
Working, yeah. Abbas, LSE Alumni Department of Management. My question is around the language. I mean, I picked up a distinction between your willingness to accept business language as opposed to Caroline's, and I was just wondering, given that, I mean, there's research recently by an LSE academic, Julia Morley, around social impact reporting. The fact that, you know, organizations that have a social purpose now are aligning themselves with business language because that's the only way, you know, you can get the funding. So first, is that a problem necessarily? Because if you use business practices, aren't you really ensuring that organizations are sustainable, so you're de-risking? And otherwise, to be honest, I mean, if it's something that is being promoted by foundations, how do you change that trend where organizations actually go back to moral legitimacy as opposed to having to say that this is the impact that we have?
Yeah, my response would be, I think the problem in language is if two people are using the same word and they understand it differently. That's where you really, I think, provided people are using a language that they both understand, that they both sort of understand, they understand what the meanings they're using and the words they're using, then it's not something I worry hugely about.
I do, and I don't have an objection to business language. I mean, my background is in business. You know, I've spent most of my life in the commercial world, but what I think is that we need to challenge this assumption that the market and business is really, 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 really great at stuff, because frankly, it's left us in an almighty mess. And so this sort of transposition of saying, you know, we're going to professionalize the social sector. Actually, how about we socialize the commercial sector, you know? And I would rather, and it needs to be a peer conversation, not a, we need to sort you out because we need to kind of, you know, make sure that you understand about business. Well, no, because, so, you know.
It's a slightly different thing, though.
No, it's about language, because.
Precise language, whatever sector you're in, I think is important. And when you communicate with people, being sure that you're using terms that are that both parties are. That's a very different thing from taking.
But language shapes as well as serves. I mean, you say impact, I say potato.
What?
My name's Sam. I'm in the environmental economics program in the master's program here. My question is actually also about language, but it's fairly specific about the word legitimacy, which I've heard you guys use a fair amount tonight. The way I have understood it presented is that it's sort of an alternative to the standard investment measurement paradigm that's sometimes been used in the philanthropic sector. And I'm wondering if that's the case, it feels to me like you still need to compare legitimacy among ideas, especially among new ideas, in some way. And if that's the case, how is that data sort of collected, measured, and validated? And more broadly, kind of connecting to that prior idea, could you guys each just give a quick definition of legitimacy for an idea in social entrepreneurship?
I was going to ask you that, how you were defining legitimacy.
Can I put you on the spot?
Yeah, I mean, for me, it's really, really clear. I mean, when we talk about community renewables, we don't mean small-scale renewables that's offered to communities. We mean that it is community-owned, community-managed, community-run, you know, and the benefits stay in the community. So when we talk about voice, we talk about the person on the ground, what we call expert by experience is a word that we use. So for us, it's really clear that it goes right down to the person, and how we pick. We have a set of, we only have so much money. We have a set of priorities, and we have a set of. I mean, it's not a fair process. It is not a fair process. It's not a fair process. That's what I can say. We have a system. but it's not a fair process.
I was just trying to catch your eye in case you wanted to give a...
Caroline answered very well.
Yeah, I'm Ben. I'm on the MSc Philosophy and Public Policy course. One of the questions I wanted to ask was to do with scalability and the importance of scalability. So when you see like a new idea, to what extent to what extent do you take into account the fact that it could be scalable into something big as an important criteria for it? Because a criticism I have of kind of small companies and is that you talked about innovation for the sake of innovation being bad, but I think one of the problems, especially as a result of this language of impact, is that it's become about growth for the sake of growth. And I think that's a real problem that a lot of small companies are facing, is that they're more obsessed with growing rather than, and kind of growing and being a good business rather than actually having impact. So yeah, to what extent is the fact that an idea is scalable, is that an important thing?
Yeah, well, we have heard this before. I think scale is important. It's not the only solution to social problems, and there are lots of great organizations and great people doing great work that have never scaled. And in fact, one of the defining characteristics of the social sector is that many of the people who work in it, they are motivated by being able to see and feel and touch the impact that they're having and work in their own communities and so on. And that's something that should be encouraged. But on the other hand, if your ambition is to eradicate malaria, which is a big problem, that's going to need solutions that are scalable. I don't think that when you're talking about individual companies, that scaling and growing is necessarily synonymous with doing business in a less moral or impactful way. It can be, but it doesn't have to be. And I think making sure that you stay on the right side of that line is important. It's important for every business, not just for small companies becoming big.
Can I just, yeah, so first of all, about 95% of businesses in the UK are SMEs. Actually, they're by far the biggest everybody thinks that, but actually most businesses are SMEs. And they are the absolute engine and backbone of this country. They keep it going. So this idea that small businesses and small are somehow not very good, I just think I don't know why we've got ourselves into that way of thinking. Secondly, this idea that scale is by organisational form rather than by connectivity, by best practice, by a hub and spoke type model, by sharing is another. And we do lots of that. So we think about scale a lot, but we don't think about this idea that we've got to invest in one organisation to grow it. And thirdly, actually, law, the government and the law is an amazing tool. Lead in petrol. You pass a law, nobody puts lead in petrol anymore. Seatbelts, it stops happening. So there are different tools for scale, and I think this idea that it's just big companies is just a really broken model, actually.
I think that's a fair, Karen's credit, I think that's a very fair point about scale. Scale isn't always just about taking one company and making it bigger. It can be taking an idea and disseminating around the country, around the world, and that's certainly perfectly reasonable approach.
Does anyone remember Will McCaskill's triad of what made interventions interesting? Does anyone remember this? He said that you should look for problems that are tractable, important, and neglected. Okay? So malaria, we know it's tractable. We know we know what to do about malaria. It's important, people die. It's neglected, Big Pharma wasn't doing it. Okay? So maybe one of the things we need to start thinking is slightly less focus on this notion of scale, which is another one of these things that is applied by analogy with the private sector, and in particular by analogy with technology platforms, and start thinking about things that are neglected, important, and tractable. Okay? If you remember McCaskill's triad, yes, sir.
Hi, my name is Bowen Fang. I'm a master's student here at Studying Management. So my question is, I think, Nick, you mentioned that the emergence of the impact investment sector kind of started in around 2007. You were heavily involved in the the creation of that. My question is why now? Do you think there was a catalyst for why this field became feasible at this moment in time, the last 10, 15 years? Why not 20 years ago, and why not 10 years in the future?
I think I said the term impact investment was invented. It was developed in 2007, 2008. The idea of investing for impact has been around for many years before that. And indeed, many of the development finance institutions have been doing it for many years. Many foundations have been doing it for
Social housing was.
Have been doing it well before that. I do think, though, that the financial crisis gave it a bit of a kick. I mean, I think that led to a broad disillusionment with finance and with investment. I think caused a lot of people, particularly younger people, to question. I think it gave them also a better understanding of the importance of capital flows, that capital flows really did affect people's lives in a very meaningful way, and caused them to ask the question, well, you know, shouldn't we be asking that additional question when we direct our capital? So I think that, and it so happened that in 2007, 2008 was when a group of people went down with the Rockefeller Foundation and created this term. But as I said, I think the idea, and it has grown, certainly it's probably hasn't grown as much as the hype has grown, but it has certainly grown, the idea has become much more mainstream since then.
Can I just, do you know where the building societies came from? So in the 1700s, the Irish immigrants would put a jar on the bar, and they would all put their spare pennies in the jar. And when the jar was full, they knew it was enough to build a house. And they had a priority list of families that needed houses. So they'd take the jar, and they'd go and they'd build a house for that family. And then they'd put the jar back on the bar, and it would fill up again. And that is how building societies started. That was so actually impact investment, social investment, whatever you want to call it, has been around for a long time.
Okay, I think we're coming to, we're about to come to our penultimate question right at the back, and then those others of you who have their hands up, I'm going to ask you to merge your questions quickly one after the other, and then I'll ask the panel to respond to them all mashed up. Yes?
Great. I just wanted to go back to sorry, my name's Ashley, I'm from the MPA program. I wanted to go back to risk and the fear of failure, perhaps motivating a lot of organizations to not engage in any sort of rigorous evaluation of their programs or policies. I mean, we spoke just now about microfinance having mixed evidence, but at least there's some evidence rather than no evidence at all. And you both mentioned that you're from organizations who admirably are open to this idea that maybe not all projects will be highly successful. I wanted to ask how you thought we could maybe reduce this fear of failure in other organizations to encourage them to evaluate their programs. And I wanted to also know if you've ever had programs or projects not succeed, what have you done with that information? Is it publicly available that, maybe not everything's a success?
Yeah. Well, I think in the second part of your question, I think certainly the Gates Foundation has been very open about its failures. It doesn't attract the same amount of public criticism as a government would if they had a similar type of program. The first part of your question was risk.
How to encourage other foundations,
Yeah, I'm not sure that I see that in the majority of foundations that I'm familiar with, I think do recognize they are risk takers. And they are becoming more focused on, if they have failures, why they have failed, and they're sort of iterating to a better solution next time. Yeah, and I think hopefully foundations like Gates or Esmée can sort of lead that movement.
Yeah, I mean, we think failure is just a learning opportunity. Mm-hmm. That's how we see it. In fact, we call it yeah, we don't.
It's a great advantage of being a foundation compared to being a government.
Yeah.
You
Yeah,
know, because
it
it's
is.
not,
Yeah, it really
we
is.
can argue about legitimacy, but it's somebody has given this money for charitable purposes. There's a group of trustees that are responsible for it, and you know, if they make mistakes with it, they make mistakes with it. Governments are in a very, very different position.
Right, I'm going to suggest that the last two people whose hands I saw, and indeed the third person, if you're really, no, not first, you're first, I think, and then you, we can mash those questions together. Go.
Hi, my name's Keisha. My question is on the socialization of the financial world. So I would like to ask, how far do you think this would happen? So we see like university endowment funds, pension funds, even sovereign wealth funds, increasingly asking social questions, like for instance, negative screening, investment in green bonds, or ESG, so on and so forth. Do you think that this is as far as we can expect it to go, or no, there's a lot more that the financial world can actually change in this aspect?
Okay, got it. Next one.
Hi, my name is Colin. I'm with the MSc for Health Policy Planning and Financing. And you guys talked about it just a little bit on this previous question, but Caroline, you've been pretty good. I think it's really important to be hypercritical of your own organization and to constantly critique and look back. So I'm just curious, what would you most be critical with your own organization, and what would you like to change the most?
Good question.
Good question. Last one.
Hi, my name's Frances. I'm a second-year MPA student. A couple lectures ago, we talked a bit about co-generating knowledge and about putting beneficiaries at the center of interventions and doing interventions with beneficiaries instead of to beneficiaries. And as donors, where do you see your place in that sort of co-generation of knowledge? Do you see yourself as just funding it, or do you see yourself as being actually an integral part of it?
Okay, great questions. Let me try and summarize them. First question, this so-called socialization of finance, okay, the imperative to look at externalities, positive and negative, in investment and so on. How much further can that go? What are you yourselves critical of? And what are you doing to encourage or support or engage with co-generation, by which I think you mean the beneficiary at the center of the engagement? Can you each take all three, or do you want me to split them up?
I'm happy to take a shot at all three.
You do all three.
I'll finish. All be of equal length.
Perfect.
On the question of how far can the socialization of finance go, I think it's worth remembering it's gone quite a long way already. And recent estimates talk about total investable assets of about $100 trillion around the world. The amount of money that at least has some sort of screen on it, some question asked, even if it's a trivial one, is about $23 trillion. Is about $23 trillion, and so. And in some areas like Europe, for example, apparently it's up to sort of close to 50%. Now, a lot of those screens are very trivial. I don't want to say that that's the whole answer, but clearly that is a movement that would have not existed 10 or 15 years ago. So that I think is significant momentum that we should take encouragement from. I think in terms of criticism, so being self-critical, and I feel. Not terribly comfortable doing this to the Gates Foundation, but I think most people would tell you it gets back to this question we had earlier. It's very difficult not to be really bureaucratic if you've got if you're trying to give away $4.5 billion a year, and I think and so there's an inevitable tendency to bring in import bureaucratic processes from multilateral organizations and governments and so on. And I think that, and you will hear that from, and they do all sorts of things to try and prevent it, but it is a challenge. And the co-generation, I'm not sure I have a good answer to that actually, because I'm not close enough to the field effectively to know what the foundation is doing in that area.
I think they're all pretty much one and the same thing, actually. And I think that we don't want to think about it, but actually the fact that somebody in Port Talbot on a 0-hour contract only being able to work 8 hours a day with no job security, no way of feeding their families, is linked to the fact that you've got multi corporations not paying their tax, not paying people properly, and in between you have investors and flows of money that facilitate all of that to happen. And I think it's all linked, and unless we fix it, all this disruption that's happening, this is going to carry on and be writ large. So I think we need to build in that golden thread all the way through, and we're not doing that. And I would say that's the thing that I would hold Esmée up to account. We're trying to, but we're not doing it well enough. And we're very progressive in some ways, but not quite as progressive in others. And that is, I think, because it needs to be that golden thread.
Great answer. Okay, I'm not going to try to give you a completely parcelled up and coherent summary of what we've been talking about, because as you've just seen, it's a bit more complicated than that. But I am going to try and highlight a few key phrases or a few key ideas that I think the panel has suggested for you to think about. The word collectively came up right at the beginning. This is not a problem that can be solved by somebody doing something for or to others. Okay? This is the question of beneficiary-centeredness of code generation. There seems to be clear agreement that this is not all about, or even principally about, the cash. There seems to be an agreement that how we frame things matters, language matters. There seems to be some slight disagreement about whether those things that are typically associated with private sector practice, let's call it rigor, okay, is necessarily the right way to go, and some of that stuff may lack legitimacy itself. It's about the investee, not the investor. Risk is good. Incentivizing better grant writing is probably not the way to go. This relates to your question about equity. Okay, it's clear that there is a real effort to try to modulate or refine or make more nuanced this notion of that we know how to select better rather than worse impact, and doing it simply by analogy with certain kinds of private sector clarity may not be quite right. And failure, or failing as an experimental process, is really what social innovation is about. Those are the things I think I heard the panel say. If I've left out anything really important or critical, then I apologize, and I'm sure we can come back to it. What I wanted to do last is to thank Caroline and Nick. It is a non-trivial thing to explain what it is you think you're doing when you're doing something as important as trying to reduce harm and increase benefit. Okay? It requires courage, it requires integrity, it requires all of those things. So thank you, Caroline, and thank you, Nick. I'd also like to thank those people with whom we co-generate this series. So you can now clap yourselves. Thank you, audience. You've made this a great series. My colleagues on that side of the room have been amazing and make sure that we end up in the right room at the right time, listening to the right people saying, I hope, interesting things. 2 final points. Please fill in the form that you were given on arrival, and anyone who has a form but has left without filling it in, please nudge them to do so. And last, since this is the last of the series, there are drinks for us to continue these conversations, to talk to each other, and I hope carry on these conversations in the Old Theatre atrium, starting now. Thank you.